Listen, we will return to Ned Bell, who is joining us live from Melbourne. Ned, welcome to the program. Good morning to you. I'm just checking in that you can hear us okay?
I can. Can you hear me?
Yeah, we can. Wonderful. Thanks for sticking around for that. So I guess we were just sort of asking about the cusp of what we're on, this US presidential debate, and how you're thinking about it.
Yes. Apologies for that before, and thanks for having me. So clearly, from our perspective, the market's attention is going to be very much focused on the US presidential election, and I think from our perspective, you really couldn't have two more different options as to how the election could go. Clearly, the platforms of Trump and Biden are complete polar opposites, and I think we're really set up for what could be one of the most contentious presidential elections in recent years. And I think the reality is it is going to create uncertainty, and the uncertainty around the outcome of the election is going to be what probably dominates markets between now and the end of the year. And I think you guys have been talking recently about some of the volatility around the idea that President Trump, for example, hasn't necessarily committed to an orderly handover of power should he lose. There's been the recent, I guess, cutting of funding to the US Postal Service, clearly against the COVID backdrop and the importance of postal votes. That clearly throws in another spanner into the works. So yeah, it's a very, very volatile environment. And I think from our perspective, we are, probably erring on the side of caution. We're steering our portfolios away from where we see probably the most economic risk and the most valuation risk.
Okay, so I'm just going to pick you up on something that was in that answer. You said, the volatility through to the end of the year. So are you sort of working on the assumption, Ned, that we won't have an outcome, not just on the night of the election, but perhaps for quite some time? And that is obviously, really, really uncertain for markets.
In short, yes. I think
Okay.
there's a high likelihood we're not going to have an answer for some time, possibly into early next year. And again, part of it's due to the fact that the postal votes will constitute such a large part of this election, like we've never seen before. And I just don't see this being a clear-cut transition of power should Biden and Harris win. And I think Trump he's made on numerous occasions, he's alluded to the fact that he won't necessarily accept the outcome if it doesn't go his way.
Ned, for a long time we've seen the markets basically put Biden in the camp of being less market friendly than the President Trump. We know what Trump's about. Do you think that's actually starting to go and change a little bit now that maybe people are looking at Biden and saying, well, potentially as a candidate and potential president, he may not be as bad for stock market in particular as what was first thought?
Scotty, I agree with that, absolutely. I think the reality is that as we look into 2021, you need to look at the ability of the US economy to recover, number one, and number two, which candidate is best positioned to really get their arms around the COVID crisis, which it's still somewhat out of control. There are still huge numbers of cases, and whoever wins is going to have to do a lot to really put some economic underpinning under the US economy for next year. And I think the reality is that probably the voters are probably leaning more towards the safe pair of hands type options, or which candidate would be considered safer. And I also think the priorities of many of the voters have probably changed somewhat from what was the case 4 years ago. So 4 years ago, Trump obviously won on the back of economic management as being his key, I guess, draw card to winning those battleground states. And if you think about those battleground states now being states like Florida, Ohio, Georgia, North Carolina, Michigan, Pennsylvania, and Wisconsin, they collectively account for about 124 electoral votes. And it's really those states that are going to determine who wins the election. And I think from my perspective, two of the biggest issues that have probably gone right up in terms of importance in those states and others is, number one, the handling of the COVID crisis, and number two, social justice issues. And both of those issues are very much play in favour of a Biden-Harris victory. But again, it's so hard to say how the debates will play out. Clearly, Trump will most likely play the man in the debates and probably try and lure out a senior moment or two from Biden. So we'll have to see how we go.
Yeah, I know you've got your TV tuned and ready and waiting. But Ned, you said that you're moving cautiously because of this scenario, which you've painted, and the uncertainty likely to come through potentially, you say, until the beginning of FY21. So does that mean having cash on the sidelines, or does that mean rotating into specific sectors in the US?
So I think the way we think about it is that valuations for the market as a whole they're not too bad. So the MSCI World Index is trading on a PE of about 20 times depressed earnings. But there's massive divergence in valuation. So growth stocks we still think are incredibly expensive, trading on 29 times. Whereas sectors like healthcare and consumer staples they're incredibly inexpensive relative to the market, relative to their history, and their earnings underpinning is actually pretty solid. So we're actually finding good opportunities to buy stocks that we think are going to do really well over the next few years by virtue of not only how they compound their earnings, but how the valuations change and potentially expand on the upside. So, and then the other, I guess, pocket of opportunity we've talked about a lot is the global small mid-cap space. That's where we have, and this sounds somewhat counterintuitive, but the reality is the best time to buy global small mid-cap stocks is when they are operating in a pretty uncertain environment. This year is very much the trough year for global earnings. In the last two big global earnings troughs, being post the dot-com boom in the early 2000s and post the GFC, in the subsequent 5 years, the MSCI World Small Mid-Cap Index delivered a total return of 180% in the next 5 years. So huge, potential to make money. And it really comes back to the idea that the earnings leverage post-COVID is very big and very meaningful. So the companies, they're cutting their cost bases. And again, this is another part of the market. It's not crowded like arguably the big tech stocks. So we see a lot of potential to make money in that part of the market. We've been rotating the portfolios away from the large cap growth names for quite some time. We're probably a bit early doing that, but we do think that the small mid cap space is potentially really great opportunities.
So keep an eye on the other smaller companies and potentially for bigger returns ahead. Ned Bell, Chief Investment Officer at Bell Asset Management. Thank you so much for your time this morning.
All right, thanks guys, appreciate it.